leaders and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Let's get to our top story here. U.S. Vice President Kamala Harris has secured enough pledged delegates to clinch the Democratic presidential nomination, at least according to a survey by the Associated Press. Harris says she does intend to unite the nation and win November's election.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
The name has changed at the top of the ticket, but the mission hasn't changed at all. And by the way, I'm not going anywhere. I'm going to be out there in the campaign with her, with Kamala. I'm going to be working like hell, both as a sitting president, getting legislation passed, as well as in campaigning.
A lot to digest. There's some real messages of support coming from Joe Biden for his VP and the potential presidential nominee from the Democratic side. Let's get more from Bloomberg's Vonnie Quinn standing by for us in Washington, D.C. Vonnie, walk us through the process here. Is it fair to call her the presumptive nominee?
Yes, now it is actually, Kriti. I mean, anything can happen between now and the convention, obviously, and things tend to happen. But as of right now, if no challenger emerges, she is the presumptive nominee. This after she got more than 1,976, which was putting her into the majority of delegates. Much more than that now, according to AP and our sourcing as well. And you could see that today, that's yesterday, your time. So on Sunday, she basically gave a speech to her staffers from what is now the Kamala HQ. It had been the Biden HQ, and she's rebranded herself as Kamala. She wants to get out there and have the electorate get to know her a little bit better. They hadn't had that kind of chance while she was vice president. To that end, she's beginning to start her campaign. Tomorrow, she will be in Milwaukee, a crucial swing state, Wisconsin. She needs to start making inroads and getting the progressive and moderates behind her now that she has the Democratic Party completely unified behind her. She also, of course, needs to have a vice presidential pick before the DNC beginning of August 19th and running through that week. Still a lot of candidates on that list. They're right now being vetted by the FBI, and at some point we'll know who that will be. Several governors still in the mix of swing states. It's not quite clear whether she will go for somebody who might be able to swing a state for her or whether she will take personal relationships into account or how that process will work, but we'll definitely hear about it.
It's interesting that you mentioned kind of where that strategy lies. You have names like Andy Beshear, for example, out of Kentucky. You have the names of Mark Kelly out of Arizona, Roy Cooper out of North Carolina. There's plenty to pick from. We'll see how she handles that. One that's part of her election strategy. But speaking of election strategy, let's talk about the Trump side. What can we expect to hear from the GOP campaign there, especially when it comes to winning over the very electorate you're talking about?
Exactly. Well, we're already starting to hear it, Kriti. We had the super PAC that is attached to President Trump already out with an ad calling her Joe Biden 2.0. She'll be ready for this. She knows that there are flashpoints, and one of them is the economy. One of them is inflation, obviously, and the border is a huge one as well. They had taken to calling her the border czar, Biden's border czar, which isn't true in the slightest. So she will be ready for attacks on the economy and immigration. The Biden administration hadn't done a great job messaging that the economy was improving and that inflation was coming down, and there is hurt across the country. On the other hand, look for her to go on the attack as well. She already did that in Sunday's address a little bit to her staffers. She already talked about her past as a prosecutor. Now, that wasn't something she would have played up 4 years ago when she was running as Joe Biden's running mate, because back then a law and order candidate wasn't particularly what the more liberal parts of the electorate were looking for. Now, though, it's a different moment in time, and she can play that up, and she is playing it up. In fact, she said today that in her past as Attorney General in California and before that a prosecutor, she had prosecuted fraudsters, cheaters and predators, and she said, so hear me when I say I know Donald Trump's type. She is going to go on the attack. Yeah. She can also use the age gap to her advantage, where obviously that couldn't have happened before Biden pulled out.
It's certainly something she's leaning into. We've talked about it in the previous hours of programming, Bonnie, about how she's leaning into things like the meme crowd, for example, to really highlight that demographic difference. We should also mention she's talking about and accusing President Trump of being part of that Project 2025 agenda, which President Trump, the former President Trump himself, has really distanced himself from, despite, of course, choosing J.D. Vance as his running mate. Lots to digest out of Washington. Lucky for us, we have Vonnie Quinn on standby, who will be joining us throughout the week. We thank you so much for that crucial context. Sticking with D.C., a U.S. House committee has called on the CEO of CrowdStrike, George Kurtz, to testify on a defective software update that caused widespread global outages. Congressional committees have the power to compel testimony by issuing subpoenas by usually first asking witnesses to appear voluntarily. And sticking with the airline space, Delta Airlines says it expects to cancel more flights this week as it tries to recover from that very crippling technology outage. Delta canceling more than 800 takeoffs yesterday, bringing its total since Friday's meltdown to over 4,600. Now, more than half the airline's worldwide IT relies on Microsoft Windows operating systems that was affected by the software error. Now, I want to bring in Bloomberg's Guy Johnson, who, of course, is with us from the Farnborough International Airshow, where he just interviewed the Airbus CEO, talking about supply chain issues plaguing the industry that could last for a few more years.
But I think bottom line, it's about onboarding people, training them and ramping up the quality, the safety and the quantity of what we're doing at the same time. And that takes time. We have thousands of suppliers. Yeah. And when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody. And that's what we've been facing earlier this year.
Well, the man himself joins me now, Guy Johnson. Guy, walk us through what we're starting to see in the demand space.
So we're starting to see a slowdown, potentially. You're starting to see that here in Europe. You've already seen evidence of that over in the United States. We saw Ryanair out with its numbers yesterday. Critty, you track that one pretty carefully. We're seeing it over in the US, though, particularly at the kind of the low-cost end of the market. So we are starting to see a slowdown already. Guillaume Faury telling me very, very clearly, though, that he doesn't think that that will mean a slowdown in aircraft production. At the moment, it's not a demand-limited market. It is a supply-limited market. They're still struggling to deal with the supply chain issues that he was referencing just there. That's not going away anytime soon. So there's a slowdown in demand. It's unlikely to ripple into the OEMs, the Airbuses and the Boeings. They're likely to continue to try and make as many aircraft as they can. Airbus obviously in a very different position to Boeing right now, which has been heavily limited by the investigations and the limits that the authorities in the States are putting on its production facilities. So Airbus in some ways is having to throttle back because of production limitations. But Faury's saying very clearly, if there's a slowdown in demand, that's just going to mean that actually maybe we can catch up a little bit.
Well, speaking of catching up, let's talk about new designs, new innovation coming out of Airbus. What do we know on that front?
So at the moment, we've probably reached or are reaching the limits, Critty, of the current versions of the narrow bodies we have, the single-aisle aeroplanes that we all spend so much time on. You've got the 737 MAX. We all know that that's obviously probably reached the end of its life with the 737 program, which has been around for so long. The A320 family. Now, Airbus have brought here their latest version of that aircraft, which is the XLR, the extra long-range version, which can basically kind of fly around the world as a single aisle. But they're reaching the limits now, so there may be some incremental changes. But if you want to see the next generation of aircraft, the next plane that is going to make the step change in terms of the environmental standards that this industry, the customers now require, at some point soon, you're going to have to make a decision. Now, Airbus is going to be in a much better place to make that decision from a financial point of view than Boeing is. But it's about the technology and whether that technology is there yet to be able to sort of drive that next aircraft type coming through. But he's basically signaling that that's likely to come at the end of this decade, that decision. That is a huge financially huge consequential decision for this company to make. It's a kind of make or break moment, and it's going to come at the end of this decade, and it's going to be fascinating to see how Airbus and Boeing compete for that market, because if Airbus can get there first, that is a huge potential advantage for them. When does Boeing get there is going to be an open question at the moment. But he's now saying that decision, that massive financial decision, probably has to come at the end of this decade, Chrissy.
Some really interesting timing, of course, as they're all kind of juggling the geopolitics from around the world. Bloomberg's Guy Johnson, live at the Farnborough International Airshow. We thank you so much for bringing us that crucial context. And speaking of, we should talk about these markets as well, because you are seeing a real risk reversal when it comes to the equity markets in the region. The Stock 600 is substantially lower. A lot of the declines are fairly broad, despite the gains you're seeing in the likes of SAP. We have a lot more to digest in terms of what's moving the financial markets. We're going to dive into them right after this break. Stick with us. This is Bloomberg. There's a lot going on in these markets. There's a lot going on in these geopolitics. So how do you position for it if you're looking on the outside in for the kind of chaos over in the U.S. political scene, the monetary policy picture on both sides of the Atlantic that isn't very clear, and some really interesting economic dynamics that are emerging in Europe as well, from manufacturing weakness in Germany to, of course, the geopolitics as well in France, not to mention what's going on in the broader European Union. To kind of mesh all the idea for a international portfolio, we have the perfect guest. Claudia Panseri, Chief Investment Officer for Wealth Management for UBS in France, joins me this morning. Claudia, an absolute pleasure to have you on the program, and really lucky timing, because maybe you can help us make sense of the chaos in the news flow. I'm curious what the best kind of hints you're getting in terms of positioning here. Do you pay attention to what's going on in the States? Do you Trump-proof a portfolio versus looking at perhaps monetary policy as the primary driver right now? What is top of mind for you?
Good morning, and thank you for having me, and hopefully I can bring some answer to a different question. I think it's a very interesting period. I mean, we have seen a lot of volatility in Europe just a few weeks ago, and now you see market moving back again and performing quite well over last week. I think geopolitics and politics overall has always a limited impact on markets. They can increase volatility in a very short period of time, but at the end, what matters is economy, inflation, interest rate, and earnings growth. So clearly, even if the market is now focusing on the election and all potential Trump trade or re-widening Trump trade, what is really important at the end is where the economy is going. So in this election, what matters is the impact of a fiscal policy for instant growth, or tariff on relationship with China, and what does it mean, for instance, for production. I think we need to make a step back and think which are the consequences of the politics rather than politics itself.
Do you think it's too early to price in a Trump trade? And Claudia, the reason I ask this is just because in the last 24 hours, we've seen some really interesting market dynamics. We've seen strength in the Japanese yen, the Swiss franc, arguably the dollar as well, against the yuan, against the Mexican peso. That, to me, on an FX front, screams Trump trade. But then you look at the equity market, and you're actually seeing much more of a rotation to what some would call Democratic-friendly kind of sectors off of that Kamala Harris story. Who has it right? Is it the stock market? Is it the FX market? How do you think about that?
I really think that the Democrats are back running, so the probability to have Trump in power is still very high. But there are more, let's say, more volatility around the outcome of the Congress. So many people who are expecting the Congress to be Republicans with Trump running the presidential election, I think now the probability of having a Congress and having a red suite is lower than before. This does not mean that the market should be under pressure. Be careful, because Kamala Harris, if she's nominated, then she will bring the same policy and the same support that we have seen over the last years. So I really think if the market is selling off heavily, should be a buy opportunity, because the earnings season start very well. The Fed should start a cutting rate in September, and the economy is not in recession. So I think the market is just taking a step back, putting Democrats on the running stage as well. But it doesn't mean that the market should be under pressure. I think the underlying story is very well oriented for U.S. stocks.
Well, it's interesting that we're kind of trying to piece together the policy agenda of both candidates in terms of that, because both candidates have to deal with one very important deadline coming up in January of 2025, and that is the debt ceiling at the end of the day. We talk a lot about it in Europe, and I want to get your insights, and we'll do that in a moment there. But I'm curious about what the bond market positioning should be going into an election where both candidates are expected to continue and be faced with public finances in the states that aren't necessarily slowing down. How do you position for that, the very first thing on the president's agenda, whoever that may be, on January 2025?
Yeah, this is a very good question. I think the bond market, we need to be very careful in the sense that you may have some premium on the long end of the yield curve, so you may probably have some volatility on maturity and duration above 7-8 years. So the best is to stay invested in high-quality bonds, but with a tenor which is around 4 or 5 years, not more, because the 4 or 5 years tenors then is more linked to monetary policy than the fiscal policy. The fiscal policy always past the long end of the yield curve. So, for instance, 1, 2, 3, 4, 5 years max of tenor, that will be the best way to be positioned on the fixed income for the coming 6 months. Of course, if we have a solution on the debt, we don't see a huge amount of debt spending, and the market and the Fed start cutting, then we can increase the duration. But for the time being, I think, say around 4 or 5 years is the best place to be on the yield curve in U.S.
Oh, it's fascinating, especially when you have that positioning around the deficit story. I'm having a little bit of deja vu because we keep talking about the positioning around the French deficit story as well. Claudia Panseri, don't go anywhere. We got to still get your take on Europe as well. UBS's wealth management CIO in France is sticking with us. Plenty more ahead. This is Bloomberg. Welcome back to The Pulse. I'm Kriti Gupta in London. Emmanuel Macron has called for a political truce during the Summer Olympics in Paris, which began this Friday. Now, the French president has dissolved the lower house of parliament last month, leaving it with no clear path to form a new government. Now, it is possible that Macron could now wait until after the games to end in August to appoint a prime minister. And we should also mention they're coming up against a budget deadline with the EU Commission in terms of getting their finances under control. That coming up in September as well. Still with us to navigate all of this news is Claudia Panseri, Chief Investment Officer for Wealth Management for UBS in France. Claudia, I think you're the perfect guest to talk about this because it's fascinating that we're talking about waiting for a new government, understanding where they're going to go with the fiscal deficit. But I would argue that perhaps the bigger concern is that kind of budget deadline that they're coming up with the EU Commission in September. How close are they cutting it, and should the markets be more worried?
Yeah, I think the market is a bit compliant on the OAT. Probably you have seen the spread are moving back to the long-term average. We are at 66 basis points this morning. And I think the risk is really around the budget law, which need to be presented in October. Keep in mind that usually you have the government working on the budget law during the summer, and now we don't have a government, actually. We have a government which only take care of daily business, not possible to put together the budget law. And France is in the middle of the excessive deficit procedure. So France needs to bring the trajectory debt back on the long-term trend, but also needs to present a budget which is in line with a lower fiscal deficit.
Very quickly, we're hearing guest after guest talk about how the periphery is outperforming the core. Spain, Italy is looking stronger than France and German debt. It feels like in some ways that's an exaggeration. In other ways, we have this higher equilibrium in the spread. Claudia, very quickly, is France an inferior credit to the likes of Spain and Italy right now?
No, I think the reality is that France has a growth which has been slowing down quite a lot versus Spain and Italy. And the other issue is that Spain is not part of the EDP, while Italy is, but Italy doesn't have a deficit, excess deficit. So the reality is that France needs to bring back debt and deficit at the same time, but also external demand need to be, let's say, lowered. So the problem of France with no government today is that we don't know what France will be able to do in terms to cut the cost back. So before having the dissolution of the National Assembly, we had the minister cutting some spending, but today we don't know what will going on in the coming weeks.
Certainly something we're going to be keeping a very close eye on. Claudia Panseri, UBS Wealth Management CIO in France, talking about the bond dynamics on both sides of the Atlantic. After the break, we're going right back to the States and figuring out how you price in the geopolitics we're seeing out of Washington, D.C. More ahead. This is Bloomberg. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Let's get to your top stories. Kamala Harris facing a make-or-break week as she remains on track to becoming the presumptive Democratic nominee. Meanwhile, in the markets, it's a tale of two German corporates, SAP rallying on that AI demand story, but Porsche taking a hit on an outlook cut. Now the focus on American tech earnings as traders look to Tesla and Alphabet after the closing bell in the States to keep up some of the momentum. Let's get back to our top story, though. World leaders scrambling to size up a potential Kamala Harris presidential campaign, all while bracing for the possibility of a Trump 2.0. Now, Harris has promised to unite the Democratic Party and win the election.
Predators who abused women. Fraudsters who ripped off consumers. Cheaters who broke the rules for their own gain. So hear me when I say, I know Donald Trump's type.
Let's get a little bit more from Bloomberg's Chad Thomas. Chad, look, we were hearing kind of soundbite after soundbite of Kamala Harris right out of the gate, really attacking President Trump. A lot of this is largely expected, given that she's trying to garner a lot of the support, not only within her party, but, of course, some of those independent voters as well. I'm more interested in what the take is out of Europe, especially in the context of a lot of the kind of questions about how much of the European leadership has really forged a relationship with Kamala Harris. What are you hearing?
Well, European leaders certainly don't know her as well as they know Biden. Biden, of course, has 5 decades of experience on the world stage, both as a senator, then as a vice president, as a true transatlanticist. And she really didn't have much wiggle room as vice president on foreign policy. However, certainly world leaders are saying they expect some continuity. She spoke at the Munich Security Conference here in Germany earlier this year and talked about the fact that the U.S. needs to remain engaged with the rest of the world. That, of course, is music to the ears of many Europeans, but they also are realistic that there is still a very high likelihood that former President Trump is going to win this election. So they are reaching out to Republicans as well, making sure that they have those connections just in case Trump wins and Kamala loses.
You know, it's interesting that we're talking about the possibility of a Trump 2.0 because it feels like the only European leader who's really almost prepared for that situation has been Viktor Orban out of Hungary at a time when even the EU presidency is looking to move the meeting that's coming up in August out of Budapest in response to some of his actions. I also was brought to my attention that Isabel Schnabel, for example, the ECB member, was caught off guard a couple of months ago, saying that Kamala Harris has kind of been in the sidelines. What does the international audience need to see from Kamala Harris to kind of reiterate that she could actually be in the Oval Office when largely her platform, to your point, Chad, has been focused on a lot of that domestic policy?
Yeah, and that has been the space that she's operated in, is in domestic policy. Look, usually when someone runs for president, they have many months, if not years, to prepare for that. They go out and give big foreign policy speeches to sort of map out what their thinking is on foreign policy. She now only has weeks, a few months to do that. The foreign policy community will be watching closely to see what she has to say. Some European leaders have been telling us, though, that her national security advisor, the one who works directly for her, is someone who knows Europe very well, and that has been heartening to them, that she is being counseled by someone who does know the region particularly well and spent time here during the Obama administration.
It's certainly something that we're going to watch very, very closely. Bloomberg's Chad Thomas, we thank you so much, giving us the international perspective on Kamala Harris and what that presidency may actually look like for not just Europe, but a broader audience as well, of course, as she kind of battles both the internal and external politics as well. Let's get a little bit more insight here. Scott Lucas, a professor of U.S. international politics at the Clinch Institute at University College Dublin, joins us this morning as well. Scott, it's fascinating to kind of get all of this news flow and understand what that means for international policy. And yet, we're not getting much clarity on either side of the aisle from Kamala Harris, from Donald Trump, outside of what this might mean for NATO funding. Scott, what are we missing?
With Donald Trump, you're not missing anything in that Donald Trump doesn't do issues. Donald Trump doesn't do foreign policy. He does sound bites and he does insults. So, he insults NATO, he insults its members, and then leaves it open whether he would withdraw, even though he has privately said while he was president in meetings with NATO officials, yeah, we'll take off if I want to. On Kamala Harris, let's just be very honest here with viewers. Kamala Harris was kept in the shadows by the Biden team, not just on foreign policy issues, but on most domestic issues. Once Joe Biden decided to run for a second term, the Biden team saw Harris, who was the heir apparent, as being a threat to that. Now, in the past few weeks, that has changed. With the prospect that Biden would step aside, you have seen Harris make a number of high-profile speeches, mainly in the United States, although Chad referred to that important speech. And I do think it was important at the Munich Security Conference earlier this year. You see Harris beginning to establish herself in terms of her character, in terms of her profile, and I think the policies will follow. I think right now, however, the priority is you get unity within the Democratic Party going into that convention. You get Harris's choice of vice presidential pick, and you get the team that is around her, the team for domestic and foreign policy. And then after the Democratic convention, I think you see a rollout on policy side. All that being said, Europeans have been preparing for this. There have been behind-the-scenes talks, as you noted in your package, with Democrats and Republicans, and those include talks, not only with those around Joe Biden, but with those around Kamala Harris. So there's already contingency planning, as it were, amongst Europeans in terms of where we go with Harris, if she should succeed, and where we go if we have what would be, let's be honest here, the disaster of a second Trump term.
Well, Scott, let's bring it right back to the policy story. We're talking about that on a security perspective, but we need to talk about the tariff picture as well, because if we're talking about Kamala Harris bringing on some of the Biden policies as well, I think there's a pretty consensus understanding that the policy towards tariffs on Europe, the policies towards tariffs on China has not really changed from President Trump to President Biden. Steel tariffs, for example, are still on pause in terms of waiting till after the election to see how they all pan out. Tariffs on China remain to the same levels that they were during the Trump presidency. Do we see any thawing on that front in terms of the levies attached in a Kamala 1.0?
Well, let's take it step by step. I think the question of China, because it's so politically charged, I wouldn't expect any significant change on tariff policy under a Harris administration. It's a little bit different with Europe because, of course, with tariffs, what happened is that some of them were effectively adjusted to quotas. And so they haven't been as strict as they were under the Trump years. I think we're beginning to live, as it were, with that quota system, including the issue of steel. But your important word here was suspended, that, tariffs on steel were suspended. What the Europeans are worried about is that, still vague, but it is a threat out there by Trump, which is to impose a 10% tariff on anyone, anywhere, on any import. That sort of blanket sledgehammer approach is what has everybody really on high alert here. I think with Harris, there's more of a sense of that the adults will still be in the room. There will still be economic issues. Let's be very clear about that. We have not recovered from the 2017 period, but I think there's going to be a lot more comfort zone in terms of where you can negotiate with the rules of the game with Harris 1.0 than with Trump 2.0.
That actually creates some sort of concern for the demographic. I mean, inflation is such a buzzword right now, not only for the financial community, but over in the States as well, the voting populace. This idea that tariffs, whether they're increased, decreased, kept at the same, is something that I feel like a lot of Americans will want to vote on. Will they, though?
Well, first of all, let me cut to the core of this. First of all, there needs to be, I'm just going to appeal to the U.S. media. Do not get led by the spectacle on this. Please provide reliable information about inflation to start off with, because it will be an attack line by the Trump camp. It's already being deployed against Harris, as it was against Biden, that supposedly inflation is out of control. That, quite simply, is not true. Inflation has been coming down steadily over the past 2 years in the post-pandemic period. That, when you establish that fact, then you can talk about what tariffs would add to this. And of course, the important point is that the tariffs had a significant effect on component prices coming into the United States during the Trump term. They elevated those input costs, which were then passed on to consumers. And some of that has continued because the tariffs have not been listed. I don't think tariffs will be an issue in terms of the election, because to be honest with you, I think it takes too much time to explain tariffs and a rather complex series of effects. But inflation will probably be an issue. And the more that the media can establish, first of all, what is happening with inflation, and then the connection with tariffs, that would actually serve the public quite well.
It's certainly one that we're going to keep a very close eye on. Scott Lucas, we hope you'll come back and visit us soon. Professor of U.S. and International Politics at the Clinton Institute in the University College Dublin. I just want to point out very quickly, the Clinton Institute is named for President Bill Clinton in recognition of his role in the Irish peace process during his time as president. And he has not recently donated, but he has made visits to the Institute as well. We should mention that Bill and Hillary Clinton have both come out as not only donors to the Democratic campaign, but recently endorsed Kamala Harris for president as well. Now, coming up on the program, we come back to the markets. Tesla reporting results later today, with investors eager to see if there are bumpy roads ahead. The robo-taxi and a new generation of cheaper cars. We're going to get the latest next. This is Bloomberg.
We are not only focusing on moving customers to the cloud. We look into their business model transformation. So when you talk about SAP, it's all about how can you actually grow your business. I mean, take ExxonMobil, one of our largest customers now in the cloud. They are moving towards renewable energies, and our software is key for that. Or when you talk about resiliency of supply chains, we infuse AI. We are connecting your supply chain with the operations of thousands of your suppliers. And that's why SAP is so relevant these days.
The SAP CEO Christian Klein speaking to our very own Tom McKenzie earlier this morning after the German software company reported a 25% bump in cloud revenue in the second quarter. It is one of your biggest index contributors to the Stock 600 today, higher by 6.4%. And even though it's one of the big gainers, you are seeing one of the big losers also moving the markets here as well. Porsche shares, for example, falling the most on record after the German car maker cut its outlook for the year. The company saying a shortage of aluminum parts could cause it to stop productions of some models, adding to pressure from some of those slowing sales over in China. Let's get more on this and bring in Danny Lee, our Asia transport correspondent, joining us out of Hong Kong. Danny, what is going on at Porsche?
Yeah, Porsche has been found to have an issue with a key supplier, and analysts are rightly raising questions about how one key supplier could make and cause such disruption to its production lines. And so we see this impact in cutting its outlook on revenue. So it expects to make around 39 to 40 billion euro this year, down from 40 to 42 billion euro. That could mean the first drop in revenue for the first time since 2010. And so when they're also looking at and projecting an impact on the return of sales, it's not a good look at how one supplier could cause such a lot of disruption. And this all really comes off the back of a pretty tough run for Porsche, and particularly in markets like China as well, and also rowing back on its EV targets. So we'll hear tomorrow from what the company has to say during its half-year results, but clearly this is not good news, more bad news for Porsche.
Is Porsche in any way a microcosm for Tesla? I can recognize they are two very different companies that do very different things with very different leadership, but I'm curious how much of a read-through there is.
I don't think there's much of a read-through here at the very least. You know, Porsche has its own very unique problems, mounting problems at that at least. You know, the business is still robust, but when you get to a position where you have to stop production potentially when one of your key suppliers can't supply, that's a pretty poor look. But for Tesla, very different contrasting picture when it comes to their ability to drive up EV sales demand. Clearly, it's been a bit of a tough time for them on the sales front, but a very different contrast to how Porsche is doing right now.
All right, Bloomberg's Danny Lee, we have to leave it there. Of course, as he speaks, we are seeing Porsche shares down by just shy of 5% this morning, dragging down the entire index. We thank you so much. Let's go from the world of cars to the world of banking, if we can. Julius Baer has hired Stefan Bollinger to be its next CEO, who will be joining from Goldman Sachs, where he is currently co-head of the EMEA Private Wealth Management. A Swiss wealth manager aims to draw a line under last year's Signa real estate scandal. It emerged last November that the bank had run up a $700 million exposure to the property empire. And in the meantime, Mag 7 earnings are getting underway, with Google parent Alphabet reporting later today. Let's bring in Bloomberg's Tom McKenzie, who, of course, is monitoring it very, very closely. We just got SAP numbers, and they're talking about rising AI demand and this kind of unstoppable trend that I think a lot of people in the markets are saying, is this the end of AI? Where does Alphabet fall into that?
Yeah, and that's really interesting, because speaking to the CEO of SAP, he says at least for them, they're still very much in the game when it comes to AI, and they're seeing that demand coming through from customers. So that is going to be a key question as well, as you rightly position it, around Alphabet. To what extent are they successfully integrating their AI products into the products that they're shifting, of course, to their enterprise customers, but to end users as well, retail customers. So we're going to be focused on the search engine part of the business, to what extent that's coming back. There's an expectation that that will come back as a core driver of revenues, of course. And then there's the cloud business. So they are behind the likes of Microsoft. They are behind the likes of Amazon with AWS when it comes to cloud. It's about a $10 billion business for Alphabet right now. Of course, they're hoping to play catch-up. That is where analysts see the most growth potential longer term for Alphabet. And again, the AI corporate incorporation is going to be really key to that. Overall revenues expected to come in around $84 billion US. We're going to look at capital spending as well. The stock up about 30% year to date. Interesting, and Morgan Stanley analysts coming out this morning upgrading their view on the stock, looking at a 16% premium.
You know, when I think big tech, I think big acquisitions, and yet Alphabet, Google isn't able to make one this time around. The $23 billion deal, or offer, I should say, for Wiz, that got turned down. Who says no to $23 billion?
Yeah. I mean, wow. You've got to be brave, haven't you, as the founder, the CEO and the executive team at Wiz, this cybersecurity company, to turn down, as you say, a whopping $23 billion US. Even for Alphabet, that is not small change. It would be one of the biggest, would have been one of the biggest acquisitions. You're absolutely right. Wiz turning it down, saying they were humbled by this offer, but they are sticking to their plan to get to an IPO, to get to annual revenues of $1 billion plus. It's a cybersecurity company that really interestingly looks at cloud data companies like AWS, like Azure, and like Google Cloud, and layers on their cybersecurity platform onto that to test the data and make sure that there are no security flaws there. Alphabet wanted to add this on. They're trying to build out their cybersecurity offerings to make their cloud ever more attractive to their customers. They recently bought Mandiant for $5.4 billion. They're incorporating that. Wiz would have rounded out the proposition. It's not going to happen, so they'll have to do it organically or look for other acquisitions. Wiz looking towards that IPO.
Yeah, it's fascinating, especially at a time when the IPO market isn't exactly a hot market to be tapping into, and yet they have that much confidence in the business. Bloomberg's Tom McKenzie walking us through that crucial tech story. Now, coming up, we go from the heavyweights of the States to the heavyweights right here in Europe. Has the world's largest luxury house avoided the malaise plaguing the sector? We're going to get a preview of what to look out for ahead of LVMH's results coming up next. This is Bloomberg. Finally, to my favorite part of the entire show, where I get to talk about fashion. LVMH likely to report an increase in second quarter sales as its key fashion leather goods unit when it publishes results after markets close today. Let's get a little bit of a preview here by none other than Bloomberg Opinion's Andrea Felsted. Andrea, what is top of mind for you? How do you even approach a behemoth like LVMH?
Well, all eyes will be on the fashion and leather goods. That's the sort of Louis Vuitton bags, Dior bags, Loewe bags. That's the real profit driver of the group. So that is the key number, and the market is looking for around 2% organic sales growth in the second quarter. And when you think a year ago, we were up against that moment when China reopened from strict lockdowns, we really thought the Chinese consumer was going to, revenge spend their way back. That really fizzled out. So we've got some, very tough comparisons. And the market is slowing considerably.
Well, broaden out the China question for me as well, because revenge spending worked great for me in my pocketbook, but it isn't working for China, and it isn't yet. We're seeing it kind of being offset by the resilience over in the States as well. How long does that dynamic stay at play?
Well, there's very little sign that the Chinese consumer is coming back. The wealthy are still spending, but it's the sort of the middle class that isn't back yet. And crucially, they're not back in Europe. That is the real driver when they start travelling to Europe, because they spend a little bit more when they come.
Yeah.
That's not happening. The States is interesting. You've got the super wealthy still spending, Brunello Cucinello, cashmere and Hermes handbags.
Yeah.
But it's that so-called aspirational customer that was hurt by inflation, higher borrowing costs. They're not really coming back yet. And indeed, we will be looking to LVMH to tell us their read of what they see happening in the States.
But how does that break down? And this is, I think, where we go into like kind of the behemoth of the question, because you do have the handbags, you have the purses, but then you have the spirits business as well that kind of does its own thing. Swiss watches is another piece of it. How does that kind of product breakdown start to look?
Well, it's quite similar. I mean, spirits have suffered from the same factors as luxury goods, actually even more extreme, actually. Watches is interesting. You've got, Chinese demand for watches really slowing. That at Richemont, we saw that offset by demand for jewellery. So we'll see with LVMH whether we get the same dynamic. Jewellery seems to be sparkling, but there's question marks over whether Tiffany's enjoying that because of its focus on more of the middle class aspirational consumer. So we will see with LVMH whether we get the same patterns there.
Only way to buy jewelry is if it's sparkling. Andrea Felstead from Bloomberg Opinion, we thank you so much for giving us that preview of those LVMH results. In the meantime, I want to talk about some of the other results that we have gotten right here in Europe. We have the SAP and Porsche, a kind of microcosm for what we might see over in the States as well, with the likes of CrowdStrike, of course, top of mind, given the global outage. Those shares higher by 1.2% this morning. Then you have Alphabet and Tesla reporting after the bell over in the States, both higher, despite Alphabet getting turned down for that $23 billion offer for Wiz. Tesla, of course, also higher by 0.4%. There's a lot going on in these markets. Broadly, risk sentiment is turning fairly negative, despite some of these kind of small outperformers. SAP not able to hold up the entire market. There's plenty to digest in the FX markets, the bond markets, the equity markets. I'm going to toss the baton over to the Bloomberg Brief, Danny Berger and Manus Cranny in New York. This is Bloomberg.